Hello, this is Steve Malone with Compass FX. I hope you're doing well today and you get some good trades. Over the years, I've shared a number of strategies and techniques for trading the Forex market, and many of these strategies and techniques have helped a number of folks. But from time to time, I get an email from someone who says, I'm just not getting the results I want. And that's what today's video is about, is helping you identify certain tools that you can use that will help you get the results that you want. Now, it's going to take some time if you're just starting out trading to learn the process. But as you get going, most traders spend a lot of time trying to find that perfect entry. However, that's where a lot of traders start to fail in getting the results that they want. And what I mean by that, I'm a firm believer that you need to know where you're going before you even get started. And a lot of traders just don't know where they're going. So today I want to share with you two primary things that you can use to help you determine where the trade is potentially going. First is price action, and second is targets. Are you reading price action, and are you using certain tools that can be identified as targets for the trade to potentially reach? So let's take a look at price action. Price action to me is three things. You're trying to determine the trend direction, you're looking for a chart pattern, and another thing that I like to look for is steps of three. We can see that today, this is the pound dollar, that if I draw a trend line across the bottom here and across the top, something to this effect, something that we often look for is for the market breaking. There we go. We got a highs coming across, lower highs, higher lows, something to that effect. And oftentimes what we're looking for is either a bounce off a trend line or a break of a trend line. Well, in this case, the market came down and it broke to the upside. Then the market fell back over. Now, this morning as I was trading, I was literally trading the pound to the upside. During the European session, we had a strong move because when the market hit once, twice, three times on this trend line, couldn't go any lower, broke the higher trend line, that looked for a move to the upside. Then when it came back down, it tested that previous trend line and worked its way up. This right here is a telltale sign that the market is working long, not short. So there's a way of using trend lines to determine that trend direction. Another thing is chart patterns. In this case, right now, we have a certain chart pattern. From this high to this low, across the lower highs and the higher lows, currently right now we have what's called a bullish pennant flag pattern. This suggests that the market will move to the upside. Again, just reading price action. Another thing, if I take these away, you'll see something else that I often like to use that helps me see what's going on in the marketplace. Well, in this case, I can see that the market moved up, pulled back down. Then the market went up, pulled back down. Step number two. Then it pulled up one more time and then pulled back. Step number three. Generally, when the market moves in steps of three, it's going to go into a period of being range bound, some consolidation. It may test the opposite direction, but if it can't break lower than the low that it's had in step number three, if it can't break that, then most likely it's going to continue in the direction it was going. So again, three things to look for when it comes to price action. Look at trend line breaks or bounces, look at chart patterns, and look for the market to move in steps of three. After steps of three, look for the market to go consolidate or retrace, and then break that retracement or break that consolidation either way. Then you look for another 1, 2, 3 step in the marketplace. Now let's talk about targets, because I think you might have a good entry, but if you don't know where the potential is in the trade, then you're just hurting yourself because you're thinking, well, it should go 20 pips. Well, is it going to go 20 pips? Or could it go more? Or is it possible it could go less? Well, let me walk you through some of the tools that I use as a trader to determine that potential target. When we look at this chart here, this just happens to be the Synergy setup. One of the tools that I like to use is pivots. Now you can have a daily pivot and you can have a weekly pivot. So in this case, if we take a look, as of right now, the market has that 1, 2, 3 up. It's in this bullish pennant pattern, and I'm thinking the market could potentially rise on up out of this. So if I look at my pivot tool, if the market comes back down and tests the pivot here, which is a little bit below this bullish flag, and then it gets through the weekly pivot, it ain't going to go any higher. So this would be, if the market moves down, I like to see the market break this, and then the market to potentially then move down to my next lower pivot, which would be the S1 level. Now, if the market moves up and breaks this high over here, I'd be looking for it to go to the R1. Now, oftentimes I realize that the market doesn't go exactly to these levels. So as it approaches a level, I'm aware that I'm looking for any hesitation to move to that level. So again, pivots are something you may want to consider using as a potential target. Another thing I like to use is the dots. The dots method indicator is based on an algorithm that looks at current market conditions, compares it to previous market conditions, and looks to see if the market's expanding or contracting. And then it plots these levels. So today, during the European session, when that market broke the trend line down and bounced off of this trend line up right here, I had a target in mind, the buy target number 1. Then it pushed up to buy target number 2. So I already had these targets in mind. Now, some people will say, well, but Dean, couldn't you have caught that move on up there? Well, yes, I did. I just did a little bit differently. But if the market continues to move beyond a target, be happy and content with what you took from the marketplace. Another tool that you can use is simply looking at the average daily range, whether it be the daily average daily range targets or the weekly average daily range targets. From a weekly average daily range target, you can see that the market today sat along the weekly low of the average daily range calculator that's provided by Compass FX. So it sat it there, and then today it reached up and sat on the weekly mid-low. Then it pushed on up, and this white line represents the weekly open. Oftentimes the market has a tendency to move back towards that weekly open if it doesn't continue going in a certain direction. Now, another thing that you can look at is the daily average daily range targets. And so of my average daily range, I'm looking at, if the market moves down, there's my daily target to the downside. If the market moves up, I already have a daily target in mind, 67.63. Now then, one last thing to consider is, are there any previous repeated resistance highs or repeated support lows? So if you look at this, today we went up and we hit a couple of areas up here right around 67.35. Well, if you look back in time, that's an area that we had some previous highs right back here. And then if you look that the market moved down and hit 67.10, and you can see here it was hit in those areas, and that acted as a high, but lows, lows, lows right there. Same thing here and here. Now, the unique thing to do when you're attempting to determine that target is to look for multiple targets in the same area. We refer to that as confluence. So when I was back here and I see that I have a 67.63 ADR high target with the potential of a bullish flag pattern to the upside, well, 67.63 is pretty close to that resistance high up there at 67.60. And if I go over to the dots that I showed earlier that's set to the Australian Open today, you can see that my buy target number 1 is 67.63. Now let me take a look at my R1 is sitting at 67.55. So I have 1, 2, 3 in just about the exact same proximity, and another target a little bit lower. So if the pound dollar moves up, I should be looking for a move somewhere in the neighborhood between 67.55 and 67.63. So these targets, if the market makes a move up, help me to identify where the market should be moving to. Now also it's key that when you trade, if the market's going to break out of a little bit of range here, be aware of what the current previous low and the current previous high is. If the market meanders up and down in this area, then we're not going anywhere. We need to see the market break the 67.35 to push higher. We need to see the market break that 67.10 to see it go lower. Well, how do you do that? Well, you put trend lines. Again, we'd be looking for a bounce back up or a break through a trend line, and then we look for that next level to be the potential target. So again, in a nutshell, when you're sitting down here just getting started and you've got a good entry and you're trying to determine where should you exit the trade to get the result you want, be a price action, knowing direction, pattern, and steps of 3, and then looking at targets, be it pivots, the dots, your ADR, or previous support resistance levels. Well, this is Dean Malone with Compass FX. I hope some of the information here will help you get the results you want in your trading. This is Dean Malone with Compass FX. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.